Pete, this will be your third interview this morning, I'm sure. You've run the big guns. You haven't done CNN yet, but you've done BBC twice. You've been out on our friends from AusBiz, and here you are on Boardroom. Welcome back. It's a pleasure to have you in the studio. Let's talk markets, Pete.
Well, we do trifectas by 9:30, and then we get to the best at last, Will, and here we are. This will be 4.
Rolling out the quaddie.
Yeah,
a good number.
And it is a good one.
Some people pick them by postcodes.
They do.
Other people
I
actually
saw a guy yesterday.
for market signals.
Exactly. I saw a guy yesterday in the paper, quite incredible. £2 he put on in England, and he had to pick 6 winners.
So is he a £1 or a £2 pom?
No, £2 pom, and he backed it up, and he backed 6 consecutive winners and walked away with a pool of £10 million.
No, I don't think you can do that on markets today. Can you do that on markets today, Pete?
Maybe you can. I don't know whether you do it so quickly as far as 6 horses racing in an afternoon, possibly at Ascot. So where we are, we've got inflation. We're going to cover it shortly. And what the great issue is, our dear friends at the Financial Times.
I haven't read this weekend.
And
so
as you can see, the front cover there, inflation is the big concern. So as we move forward, we're now starting to realise
how big a concern. The headline actually reads a big jump in key US inflation gauge.
Yep.
It then bullets sharpest surge since 1990s.
Yes.
Not sure whether that's the early 90s or the late 90s, but the 90s. And then we're rolling out a new overheating fear and a White House $6 trillion budget, Pete. Plenty happening on the front page of the Times.
And then that worries me to the next point, of course, being stagflation. So as interest rates there, we haven't seen a lot of movement. Are we going to see something start to ratchet up in 22 and 23 domestically here, which could be the case? And what impact will that have? Certainly to home borrowers. And then the next part is what happens globally? And I'm sure that that's the next problem on everyone's radar, rising interest rates, people taking on big debt loads, and then you've got a repayment. So everyone's putting their hand up for a pay rise, Will. Hopefully all your staff will be. 70% of Australians will get a pay rise within the next 12 months. I'll put my hand up. Is yours up, Will?
No, mate. I'm sitting here going, hey, I don't believe that we should be putting it up. I think we should be really starting to re-engineer the underlying manufactured base so that we've actually got something to sell in the future and so that we can all eat in like 1 to 3 years' time.
Oh, you're that space. Oh, well, that's interesting. So we'll just see how. So let's move on to our next problem.
Before we get in there, though, let's take a look. I mean, the baseline, they're all very headline-ish conversations, but run me through your basics. What are the prices of the key trading commodities that we all should be aware of as we sort of start this trading week? I see them on a bit of paper under there.
Yes, well, we've got gold at $19.10 an ounce. We've cracked 1900. So if you would have listened to us earlier in the month, we were saying that you would see probably 1900 by end of month. Today's the 31st and we're through 1900. Secondly, we haven't seen a lot of movement as far as base metals. They had a really strong run up until around about the second week of May, and which was great. They were exhausted to the upside. We had iron ore at $225 a tonne, and it's come off those peaks. Copper down. A lot of the other base metals have given back some of those big gains, but only a little bit. You know, that's what happens as far as markets. They become exhausted to the upside or exhausted to the downside, then they bounce. So that's where we are at the moment. I think another point of concern is where does the Aussie dollar trade this week? We've got a slew of data coming out from government, and those Chinese PMIs coming out today and tomorrow. So we seem to be range bound, the Aussie, around that 77.20 handle. Do we see further uplift? US dollar sitting at 90 for the US dollar index. So from a trading perspective, May has been outstanding.
Oil?
Well, good question. $69 for Brent. We haven't been able to break 70 as far as to close at that market. We haven't done it for 2 years. WTI, West Texas Intermediate, sitting in that 66.50 handle, could hit 67. Demand destruction. If energy prices go higher, what happens to the crimpness as far as, you know, wallet power and the purse? Summer driving season in the States, traditionally more people driving over June, July and August. Considering COVID, they'll be crisscrossing the nation. People didn't travel last year. I don't think they'll necessarily go to Europe. They'll do that domestically. So, energy prices, it's a good time to be a producer, but not too good being a consumer.
And that might well be true. All right, quick look around the region. Okay, so this is the headlines that Bloomberg's thrown up this morning. You've got COVID origins and pandemics. I think we're all aware that there's a big issue. We're facing pretty much every country in the world, whether it be the first strain, the second strain, or the latest strain.
Yeah, well, we understand now it's pretty much man-made, and we understand it came from a lab. So that's not a good sign.
No, it's not.
So if it came from a lab, and this is what Fauci's even saying is his second
thoughts,
then what happens to vaccines if it's man-made? I think there's a lot of issues.
We'll let the science speak, but I think what we're talking about here is let's get there's a range of vaccinations in play. There's new warnings in more.
Well, that
regions
BBC journalist died last week, 44 years of age, had one of them, and she died from clots. So that doesn't sound real healthy to me.
Not healthy, but look, let's face it, low numbers, right? We're talking about very low numbers. We're talking about efficacy that's there. We're talking about we've got people that are actually trying to manage a pandemic. But moving through, you've got the tech, the markets, the business, looking at the crypto component. We've got property coming out here in Malaysia and Thailand. Yep. The oil's hedged high. We spoke a bit about that. We've got Netanyahu, may or may not be in power by the end of the month. In Hong Kong, businesses driving the vaccine program over there. So really interesting sort of group of, or if you like, palette of news as we sort of look at what's going to happen this week. So look, on the charts they're about to look at, there's predictions about higher inflation. Investors may or may not have been doing a great job reading the health of the US labour market. We'll check that out on a graph shortly. May non-farm payrolls, their reports will be an interesting test to the market, and I think we'll rip through the Australian, Canadian GDP, Eurozone flash CPIs and see where we land. Sure. Pete, first chart here today, what do we got? We've got the non-farm payrolls.
Yep, so this is Friday, it'll be released this Friday. We're saying an analyst expectation will about 652,000. I'm not sure whether it's going to underwhelm or overwhelm, because over the last couple of months the analysts have been well and truly out. If we hit those sort of numbers, projected numbers, then unemployment's going to get to about 5.9% in the States, down from 6.1%, and that could be a very good number, though they're saying that a lot of the stimulus that they received in March has possibly held back the engagement with employees wanting to return to workforce. So that just seems to be a little bit of a circumstance at the moment.
But holding that thought for a moment, I think there was some business leaders that came out and said, hey, look, any stimulus into the economy early is going to kind of want people are going to want to stay home. They're not going to want to come back to work.
Yeah, well, that's very evident. You're seeing bus transportation in Sydney. That's the only city I've been to over this the COVID blues, and seems to be more people in the city, more people around. I'm not sure whether they're all coming back to, as you said, to workplaces. A lot of people I talk to are saying, well, I can still work 3 days a week from home. So I'm not sure how that all manifests and rolls forward.
Before we dig big further, it's interesting, isn't it? The gig economy was something that most people have had a little look at and had a dabble with, and considered how technology can actually help them play or work at home, right? And so so the question becomes, at some point in the future, when we look back on what the gig economy started as, what it was then forced on us as, and then what happens next, I really think there'll be a mixed view on everything from 100%. Physical, mental health, workplace productivity, the use cases for all of those things. What's your view there? Do you think it works, not work, other?
There's many aspects also as far as trustability from employees and employers, and do they want that, chair and whip carrot approach that, I didn't see the worker, so are they doing any work? And so that manageability, that all of those human components of watching the workforce in the corner office, viewing, seeing what's going on, versus people doing it remotely and cutting out an hour and a half. My daughter lives in Newport. It's 40 k's into here to go to university. It's an hour and a half to get to there, hour and a half home. To be able to do
a lot of time back in a life.
Well, absolutely. You do that 3 days a week. You're up to 10 hours a week plus the transport costs, and versus that 10 hours sitting in front of a computer doing all of your uni studies remotely, and that 10 hours is you've done your uni for the week.
It's 10 hours.
10 hours. Well, I think it's about 14 or 15 hours face to face. That's what they do, and then you do double that as far as studies. So it makes a lot easier, and this is the issue I think many corporations are facing. We work in I didn't mean it to sound like that. Our offices are in a WeWork office environment. And fascinating to observe that business structure and how that plays with both the domestic workers here and whether you're going to see a return to the workforce of corporations, because you can imagine, we've spoken off air many times as far as the cost of doing business and housing your employees in a nice office environment, or at least somewhere that's centralised, come to the city versus staying in somewhere like a suburban in Bondi Junction. Well, it'd probably save you $100,000 plus a year, $200,000 a year. So you think to yourself, well, am I better giving that to the staff, being decentralised from the city? I mean, these are all issues that greatly impact return on investment from real estate and all of those factors.
Productivity, et cetera, et cetera, et cetera.
Well, there's the productivity aspect, but more importantly, does the landlord, you want to cut a deal? You do it somewhere remote, put the $200,000 back into the workers, and they get an increase as far as wages up, 15, 20% wage rise, and they say, well, I'm getting more working there and I don't have to work in the city. It's only a couple of stops to Bondi Junction. Be closer for you, early morning swim with the kids and straight up to Bondi Junction.
Well, Pete, it's a global show. We shouldn't be talking too much about Sydney right now, but hey.
No, you've got to do it from somewhere, Will.
The next subject here is the Reserve Bank's balance sheet and what it's sort of playing at right now. It's clearly stepped up its asset purchase in 2021. It's pushing pretty hard there and, by all accounts, doing a pretty good job.
Well, yeah, we've got an interesting week. We've got a slew of data coming out from the RBA and from, our economic indicators. And I'm not expecting any surprises until July. Be interesting to note the minutes coming out this week and just reading or deciphering sentiment from or announcements, and that's what traders look at, Will. Traders look at those statements and the interpretation of them to give them, I think, a little bit more info from a fundamental standpoint, what impact that can have to rising or falling markets. And because they're not only looking for technical analysis, but what central bankers are saying and whether they start to ease back as far as bond buying. This is the issue that we face. Do we keep on, the graph is just incredible. When you really study that, it's just, have a look what 19 was, 20, and then all of a sudden off to the races in April last year, and it's just been boom. So as they taper that back, this is the issue that I think we're going to face domestically. Do we see inflation, as we made reference to, with interest rates sitting here in 23, 3% higher? Everyone's been out buying property over the weekend or over the last 6 to 12 months at inflated prices, which are fine, but all of a sudden you add 3% or 4% interest rates to it. What impact does that have as far as serviceability? And do we start seeing a large amount of defaults? That's going to be an interesting, very interesting scenario moving forward.
It will be, and I think the key thing there will be the sequencing and the timing.
Well, yeah, if you bought it, you pay $2 million and all of a sudden in 2 years' time you haven't had capital growth. It's all right if it's now worth $3 million. But if you haven't had any capital growth on your two, and now you've got higher interest rates or you've actually had negative growth, then what does that do as far as affordability and, the banks revaluing and all that?
Certainly doesn't help, Pete.
No, it doesn't.
Certainly doesn't help.
And this is where it gets to. It's economic cycles. Well, I'm not here as a doom and gloom. I'm here as a realist looking at markets.
That's a chart.
And charts and telling me that's the facts.
Figures.
They're the facts from the Reserve Bank of Australia. So they're not a bad, it's a research house, or it's an institution, and I believe the numbers. What else we got there, young man?
Let's have a little look. Canadian dollar 6-year high, so good for Canadians if you got the Canadian, the loonie.
The loonie, yep.
But, what does this really tell us? The
US
GDP
dollars.
and the employment data fuel the loonie's rally rate further. What does that really mean? It's a country still locked down. It's a country still really significantly impacted by COVID.
Yep.
I don't understand why the dollar's so high.
Well, the issue quite simply is you've seen that's heavy sell-off as far as US dollar. From 103, the US dollar index down now to 90. It was 89.6 or 89.7. There it is. And so as the dollar's fallen, Canadian dollars ratcheted up. Probably it'd be interesting to put it, and maybe I might get our people to run that. put a green one as far as Aussie, put a blue one as far as Kiwi, those three commodity trading currencies, and see what differentials there are across those three currencies.
Let's get that chart up. I think that would be a really interesting chart to get.
Well, we'll see what we can do, young Will.
Rightio, let's talk euro. Eurozone inflation's rising, temporary, sustained, ongoing. Again, headline
Front
here.
page. There it is. That's the number. Eurozone inflation is rising. Well, yes, it is, and
Alcohol
that's the issue.
consumption and food and tobacco, mate. That seems to be the driver.
There you go. Yeah, there you go. We're all on the cigarettes and drinking whiskey, and food, eating ourselves to death. So that's the issue at hand. What goes on? Where does inflation rise from here? Does it? And I'm looking forward in a year's time to see how these graphs look from where we are now, the start of June tomorrow, to where we are in a year's time. And that's going to be fascinating to look back in that vision mirror and see, wow, inflation's gone bang, or what's happening as far as stimulus. This has been a stimulus-led recovery. When do the central bankers start to ease off on the taper aspect? You know, bond buying at 120 billion a month as far as US. So the Eurozone and the ECB have got a similar dilemma as every central banker does. When do they start to taper?
When do they start to taper indeed? All right, so this is a New Zealand USD chart. Look, you know, it's still range bound, it's still tracking. Doesn't really seem to have changed course too much in a week. We looked at this
volatile.
last week, Pete. I mean, look, certainly people are trading it, clearly.
Oh yeah, and it's offering pretty good opportunities when you see it on that 4 hour, Will. But the other side is that's what traders want. They've got to look at, you know, the opportunity, what represents to the market. And I mean, currencies, you know, 6 trillion a day is traded on international currency markets, and that's the great attraction of them, because big volatility swings and a market that doesn't sleep. It's like the Australian market, 10 a.m. it opens, 4 p.m. it shuts. That 6 hour window, 18 other hours of the day doesn't operate. This market operates 24 hours a day, 5 days a week solid. And it's truly international. So that's where all the biggest traders of the world navigate to and congregate at. Next one, young Will.
All right, that's the story. You heard it from Pete. Okay, the pound versus Japan. I mean, this is a cracker of a chart. This is actually my favourite one on the deck today.
Yep.
It's not bad. I mean, that just demonstrates that British pound with Boris and the boys. You got
20 years in 20? Is it two or 3 decades? He's the first prime minister
to be married at 10
while
Downing.
while in
Downing.
office.
Yeah, marvellous. And you only wish them ongoing love and success.
Well,
and
let's
that's
face
lovely.
it, they need a little bit of a boost over there. The Royals have done a great job of kind of creating a polar play for people to pick a fence, and Boris is coming through. He's centralising.
Yeah, yes, I suppose he is. So does Boris stay in power? That's the issue there. But
that's his problem.
I saw that on. I think there were 1 million people marching or something yesterday or Saturday in UK as far as lockdown. So there's the issue.
Marching through lockdown. What do you know? That sounds like somebody observing.
It does,
the rules.
doesn't it? Yeah.
All right, but this chart here looks like it's a pretty powerful one, mate. And,
well, exactly.
And look, it's a nice rosy sort of uptick.
It is. It's very, very strong, and that just demonstrates, you know, we only think. We don't, but the traders, a lot of people out there that don't trade currencies will think, oh, Great British Pound versus US dollar, Great British Pound versus, Japanese yen versus US dollar, everything versus US dollar. But all of these currencies have huge cross-rate opportunities. And here's one here, Great British Pound versus Japanese yen. It could be Japanese yen versus euro, could be euro versus Aussie, could be Aussie versus Kiwi, could be US dollar versus pound. That's the real, I think, attraction to these markets, how big they are. And many traders have, 5 or 6 different markets that they're keeping a microscopic look at to do all of their analysis. And yeah, that really has shown big uptick.
All right, well, let's wrap this thing up. So we're talking a bit about, we're talking around the market. Here, it's the inflation story. I think the inflation story is really the continual story that we'll probably see for the next couple of weeks and perhaps even months, and if not half year. I guess our job now is to find some of the triggers and drivers there that we can really kind of start talking trade on.
Well, I want to know, I think, the taper aspect as far as central bankers and what do they do. This is the rhetoric coming out of our central bankers here RBA, I think that's tomorrow. And then I'm not expecting any surprises, but that's something we'll look at in July as far as tapering back, or, you know, how does that move over July, August as far as Australia? And then the next part, US, as you mentioned earlier, as far as Eurozone inflation. So all of that over that Northern Hemisphere summer could be very, it could give us a lot of signals how that's going to play in the end of third quarter. We start, and then naturally the end of rolling into that fourth quarter. So yeah, the next 7 months, I think are going to be quite volatile. We've had a tremendous 5 months, January 1st to where we are today, incredible. And the next 7 months I think could be even more surprises, significantly more.
Well, Pete, thank you. Let's wrap that there and let's roll forward for the week and see what happens.
Have a good week, Will. Thank you again.